Hello, good day, everyone. Welcome once again to another episode of the monthly housing market update. And this time we are going to talk about Sacramento, California. Just so you know, my name is SeeWing Yee from the Yee Real Estate Network. And every week I will talk about different metros throughout the US in many markets. Many of them are very hot markets, are very dynamic, very exciting markets. So briefly, my background is that I'm physically located here in San Francisco Bay Area. That's my main area of where I live in. But for the past 32 years, so I know the California market. However, although I'm a licensed real estate broker in the state of California, my business model is I have guided thousands of real estate investors to buy out-of-state turnkey remote passive investment properties in the best markets in the country over the past 20 years. And we have entered cash flow markets at a cash flow. That means at 25% down payment, a out-of-state investor can achieve exponential wealth over time in many markets. And right now we still focus on South and Southeast. That's all I'm going to say. You're welcome to subscribe to my newsletter in my website at the bottom of my video. And of course, like the button after you hear my video, and also subscribe to my YouTube channel so I can continue to produce videos for you. If the city and the metro that I have not spoken about, if you want me to go over it on a month-by-month basis, and I'll be more than happy to do that. But just put down your comments at the bottom of my video, of course. All right. So this is very exciting. We are going the purpose of these videos that I'm doing. By the way, I have promoted markets all over the country for the past 20 years, with the exception of upper Northeast US, and for the most part, Pacific Northwest and way up north, in the area. So everywhere else, Southwest, Southeast, and Midwest, over the years, I have promoted affordable, fast-growing cash flow markets, low affordability costs, and good rental income for turnkey, passive, mom and pop, middle class, upper middle class investors, right, to buy. Anyway, without further ado, let's get to a very exciting market in the Sacramento market, which I know quite a bit about. So let me share my screen, and here we go. I did not take a look at the advanced data, but the data I'm going to share with you are real time, right? It's very data driven, and hopefully you can get out of it. And the objective of all these videos, all this I'm going to do for the foreseeable future in many markets. I've already done. Okay, I'm not going to tell you that I've already done several markets in the past. You look at my YouTube channel, you'll know. So I'm going to go all over the map in the future in different marketplaces. But anyway, today Sacramento, California, and so let me share with you one thing. When the pandemic began back in March 2020, what we have seen is the advent of the remote working. People can work remotely. As a result, I'm sure you know about it, right? People are migrating because they can work anywhere they want, they wish, right? Because San Francisco Bay Area is such a expensive market. People, a lot of you have been hearing, oh, Californians are migrating to Austin, Texas, or other parts of Texas, or to Florida, or to neighboring states such as Nevada and Idaho and Arizona, Utah, and a few others in a western region. While that's all true, but if you take a deep dive, many of those people from the San Francisco Bay Area, they have migrated to the Central Valley, to the Sacramento Central Valley region. So you'd be surprised. I mean, the media paint a picture of a lot of out-of-state migration from California, not only from the San Francisco Bay Area, but from Southern California as well, to supposedly migrating out of state. While that's true, but what's also true is that many people migrated to a mere 100 miles, 100 to 120 miles from Bay Area to the Sacramento region. So Sacramento, there's over 1 million people there, right? So it's not only about Sacramento, there's a lot of sub-markets in the Central Valley, other than Sacramento. I'm not gonna go into that. All right, so with that said, I always start off the housing update on each metro, as I'm doing now, to go over the big picture, to go over the year-over-year appreciation data, which is, I think, is important, don't you think? By the way, you have any comments about what I discussed on this video and subsequent videos, what metros, just drop me a comments at the bottom, and just hear. I want to hear your thoughts. I will look at the comments and I will answer to your comments. Some of you may disagree with me. Some of you may want to ask some other questions. I'll be more than happy to answer them. So drop it on the comment, like my video, so the YouTube algorithm can make my channel more profitable, more views, and of course subscribe to my channel. Also, just click the subscription button, and also finally, just log into our free membership of my database on my website, so you become our official member of our organization, of our real estate investment club, and so you can receive weekly, real-time real estate investing opportunities out of state. All right, thank you so much. So with that in mind, let's go over the median sales price. Without further ado, sorry for this delay. You guys are very anxious and very impatient, right? Okay. All right. Back in 2019, by the way, some of you are watching from your cell phone. You may not be able to see the color of this of each trend line. 2019 is like a blue color, I think. And then 2020 is red color line. 2021 is orange, and 2022 is black. So, so follow me, try your best, right? I'm going to start with 2019. June 2019, the median sales price of a house in Sacramento was $420K. So keep that in mind, right? 2% appreciation growth year over year from 2018. Then 2020, which is kind of weird. I don't want to talk about 2020 too much because it's weird, right? The data is weird because everything has shut down when the pandemic began in March 2020. So nevertheless, it has increased 5% year over year from 2019 to 2020, from 420 to 442. All right, and then look at this huge gap. This huge gap means epic appreciation. The migration and the growth of Sacramento is just something that I have never seen before. And I've been living in California for the past 33 years. And I should know. So 2020, median price 442. So you fast forward to June year over year to 2021, 28% appreciation growth to 566K median sales price. Then from June 2021 to around June of this year, 2022, another 9% appreciation growth all the way to 609. So the big picture is from 422 to 610 appreciation. What is that? I mean, just divide 423 into 609, or what's the appreciation? I don't know, 50, 60, 70%. On a normal market, historically speaking, year-over-year appreciation, or from a history perspective, which is like appreciation rate normally is like 4 to 6% year-over-year for the past 50-something years. I mean, this market, as well as many other hot markets in several areas in the U.S. in the past 3 years, you have achieved 50, 60, 70% appreciation in the past 3 years during the pandemic, which normally will take you at least 10 years It takes at least 10 to 15 years on a normal market condition for you to accumulate this amount of wealth, right? So for those of you, if you're primary home buyers that were able to buy and execute on your exit plan to buy a house in Sacramento in the past 3 years, and for some of your recent investors that have the wherewithal to pull the trigger to buy investment property in Sacramento in this past 3 years timeline, both of this category of people, you have make a massive amount of wealth for yourself and your family. And for renters out there that are listening to this video, right? I don't know your situation, right? You need to consider pulling trigger, given your situation, and you are ready, if you qualify, and all that stuff. We'll talk about that a little bit later. So, yep. With that said, that's what's happening. All right. So that's the median sales price. Now let's go over active listings. Let me see. Let me share with you. By the end of this presentation, I will share with you my personal thought as to where this market is going, where has been is going, and the future prospects of it. So I'm going to make some predictions. Again, nobody have a crystal ball, either do I, but it's okay for me to give it a crack at it and make some sort of predictions. All right. So with that in mind, so this green black arrow 2022, the active listings. I mean, active listings means all the houses that are listed in a multiple listing service, right? Resales, homes, and even new construction. Right out as a year in August 14, 2022, the active listing is 5,628. And look at this. Year-over-year increase in active listing from 2021 to 2022 is 35% increase. This is pretty insane. So that tells me, and this is happening not just in the Sacramento market, in many of the hot markets throughout the U.S., which I already did the videos on. If you can look at my YouTube channel, you will see I recently did similar presentation on other markets in the country. And anyway, so 35%, and we talk about 1/3 increase in listings. So this is it tells me that people are putting their houses in the market a lot more in the past 3 to 4 months, because this active listing rise started around, as you can see, around March, right? So like a mere few months ago. And so it also speaks on the decreasing demand as a result of the interest rate rise from, we all know that, from 3% early this year to 5 to 5.5%, give and take. Right now, 5 to 5.5 to 6%. So with a rising interest rate, it makes the primary home buyers' mortgage payment double. So as a result, less people are qualified to buy. That's one of the reasons why lack of demand versus a little bit of increasing supply of inventory create this active listings increasing the way it did from year over year. All right, does it make sense? All right, so next metric we need to discuss is new listings. New listings this past month, month over month. Let's go to the last few months. Let's look at the trend of new listings in Sacramento market. So new listings this past month, July 18th to August 14th, is 649 new house is put into the marketplace in this past month of 649. So if you look at similar, compare year over year from 2021, right? So it has a 21% decrease in new listings. So this could mean that the sellers out there are not putting their house into the marketplace because for whatever reason, and the demand is not as high. Therefore, the new listings month over month from last year has decreased 21%. That's pretty dramatic, right? And then let's keep the numbers in perspective. Let me see, 649. Then let's look at pending sales, right? Out of the 649, pending sale is 453 homes are pending to be sold. They're under contract, so hopefully they will go through escrow. There will be some escrow will drop out, as we all know, always happen. So pending sale is 457 houses. Year over year, a drop of 34%. So pending sale from 2021-22 has decreased by 1/4, right? In pretty dramatic. All right. So not that much activity. Part of the reason why is, this is a summertime, is a seasonality kind of thing. This means a lot of people finally are going on vacation. There are less travel restrictions, so people are not focused on buying and selling during the summer months. So this could another partially explain the lackluster number of houses that are being sold in the past few months. Does that make sense? So it's sort of a short-term trend. We cannot, in fact, today's monthly update, you can't really tell the long-term trend based on this short trend, but we do the best we can. So then let's go over the homes sold category. So as a result, home sold is 522. It's a reflection of the decreasing sales activity, and the home sold year-to-date, August 2022, is at 27% lower than last year, year over year. So that's what's happening. And now let's go over the price drops. Now, don't freak out, because this vertical trend, I say this word vertical trend even before I click on the actual price drop trend. Now, the definition of price drop on this Redfin website is not necessarily that the actual value of a home has decreased, apple to apple. No, price drops merely mean, as you can see, the percent of active listings with price drops, which is 12%, which is quite dramatic. What does it tell you? That tells after 3 months of interest rate rise, and as a result, affordability factor is an issue for many buyers. Some people are canceling their contract. We heard about that, right? Less people able to afford the mortgage, like I said, right? Because the higher interest rate, we really potentially double a buyer's mortgage payment. So the seller that the past few months, maybe they did not get the memo. I don't know, that they have listed initially. They saw their neighbor's house was sold 3 or 4 months ago at whatever price, for example, at 500K. And then they feel like, oh, I need to list my price 20% over from the last sales comp. But, well, anyway, the demand has increased dramatically as a result of the rate hike. So they overlisted their price from the actual demand exists in the local marketplace, right? And then they once they realize that, they will probably so 12% of those people, just this past month, but it's probably more than that, right? More than 12%. People will have to most likely have to drop their list price once, maybe even twice, because of the lack of demand. Does it make sense? It doesn't mean the house is crumbling down. No. All right. All right. So let's keep that in perspective. So we have to monitor this data for next few months, actually for the duration of this year at least, to see any sort of a long-term trend. It's too early to tell. But yeah, I think the sellers are getting the memo. They will reduce the list price. It does not mean that the price of actual housing is going down dramatically or a crash. No, that's not what I meant. Now, the next thing we need to go over is, let me see. So new listing median price. Okay, so new listing median price, that's important to know, right? And the new median list price in August is 577K. Okay, it has dropped from the peak in April, sort of before the interest rate hike, of 606. 606 to 577. We're talking maybe a $30,000 drop in price. It's not really dropping price because the new category of buyers, because of the lower affordability factor, they can only buy at a lower cost price. So I can only assume from this trend line here, the median new listing price is just that people cannot afford to buy a higher price home because of the mortgage payment situation, the higher rate. So they can only buy a house in the past couple of months at between the 577K. They could no longer afford to buy on the average $606,000 property. It doesn't mean there's a significant drop in price. It's too early to tell, right? Does that make sense? So again, we have to wait longer to see any kind of trend. So, a $30,000 drop in list price for the typical buyer based on higher rate. So they bring less people to the market. So anyway, so that's a new listing median price. Let me see what else. Let's go over days to close. Days to close on the average. It takes 24 median days to close, 3 weeks. So not bad, right? I mean, that's kind of normal. So nothing looks out of line from days to close, but that's pretty normal. I was asked before, actually, it take about a month to close anyway. So that's no big deal. Now let's see what else we need to. Medium days on the market, okay, that's important. Medium days on the market. How long before it takes? How long it takes when a house gets listed before it was sold? So this is an important metric. Medium days on market, 17 days. So we're talking. It took 2.5 days to sell a typical house in this market. So to me, that's pretty quick. That's a very healthy market. It's not like before, right? Before the rate hike, before this interest rate hike, at the frenzy, as recent as March and April this year, you can pretty much tell there are still multiple offers going on. Housing selling at above list price. We'll talk about that on the next metrics, okay? When I click on that. For right now, back in February, March, the median days on the market is 1 week. That's fast moving market. It's extreme sellers market. Now, so it's the bidding war back then, right? Early part of this year. Now, takes 3 weeks to days of market. Still very strong sellers market, just so you know, right? So homes are selling quick, especially the homes that are listed according to the market price, not according to what the seller thinks of the inflated price they think they can get, right? With the higher expectation that they have. So those days are gone. Those bidding war, multiple offers, bidding way above price, all gone. Right now, it's back to a healthy, hopefully balanced market. So 17 days, still very quick, right? Still a seller's market. Now the question is, let's speak of the buyer's market, seller's market. Before I will click on the month of supply, this is a very important metric. Month of supply is, we all know 5 to 6 months of inventory availability is a balanced market, right? Anything or less than 4 months of supply is still indicative of a seller's market. So let's go ahead and click on the month of supply. And here it is for 2022. The weeks of supply, 11.8. So 4 weeks equal 1 month. 4 times 2 equals 8 plus 3 weeks. So almost 3 months of supply of inventory. So you tell me, 3 months supply inventory right now as of August 22. What do you think? Buyer's market or seller's market? Still a seller's market. Whenever there's a seller's market, there are more demand than there are available inventory. So therefore, housing prices are still predicted to continue to rise, not at a double or triple digit appreciation like we have seen during the pandemic, but perhaps a single digit appreciation or expected for this year, in spite of this potential price drops, at least up until now, August 2022. Does that make sense? So, and then a few more things and we should be done. And then what you need to know is average sale to list ratio. That means based on the final list price, what was the actual price under contract? Is it above the list price or below the list price? That's a very telling sign. So with that in mind, you can see the drop, right, in average sales to list price, obviously, right? So the average sales price is 0.99. This means the actual sales price or slightly below the final list price as of right now, right? Whereas before the rate hike, right? When everybody, getting this tremendous 4% historical low interest rate back in March and February and March, the average sales list price is 1.03. That means people are buying the homes at above asking back in the early part of this. So now is the buyer have more negotiation power. They are able to get more concessions, especially with new constructions and what have you, right? All right, so I think I cover all the important metrics. So here's my big recap before I'll leave you. My big recap is, there's a slight sales drop in the market in Sacramento. Short term, I don't see anything dramatic. I don't see a drastic price drop. We don't know yet, but clearly I'm not going to see there will be no crash, right? Because it takes a lot for any market to crash. And Sacramento is a very healthy market, and we still see migration and population growth. Especially people will continue be able to work remotely, and they could work in the Bay Area or somewhere, and they can buy a house much cheaper in Sacramento than in the Bay Area. So and the entire area region is growing very, very fast. So long term is going to be great. Yeah, I know the interest rate has, it may not rise this year, but this is a sort of a disruption, a reset of the market. I predict if the interest rate remains 5 to 5.5% later this year, we will see more demand as the fourth quarter. So fourth quarter of any market, we see more demand because everybody's back to their normal living situation. All the children are going back to school and everything else. Vacation is already done. So I could see the market going to pick up, given the data I see here in Sacramento. So as a home buyer, yes, you should still buy in this market because it's still very, very affordable, based on other metrics. But for investor, not very much so, especially turnkey, especially mom and pop investors. If you want to buy for cash flow, you're not going to cash flow that much at all because the price point is way too high. We're talking median price of $612 few months ago, and now the median price in Sacramento is at $580. Used to be $419. Even at $419, it's very hard to buy as an investment property, especially single family homes. But if you bought a single family home in Sacramento like 10 years ago, right, you can cash flow at 25% down payment. Now the rent to value ratio, your rent you could collect on a home this price $580K. At the most, somebody can pay you $2,500, maybe $3,000. But if you put 25% down to buy a single family home as an investment, you're not going to cash flow. You have to pay at least 50% down payment or buy all cash at this price point in Sacramento to cash flow. So most people rather, if they have extra money, they rather buy. If you want to buy, someone want to buy investment property and they live in Sacramento or Bay Area, there are people who can buy out-of-state property. So that's the right. So anyway, thank you for attending. That's all I have to say. And go ahead and click the like button, and also subscribe to my channel, YouTube channel, so you get more videos about the other markets throughout the U.S. Coming to you on a weekly basis. Thank you so much. My name is SeeWing Yee from the University Network. Have a nice day. Bye-bye.